Welcome back once again to the fourth video in the series on growing small accounts. So in this video, I'm going to be showing you guys how I grew a $10 account to $62. Basically, I did times 6 in just one trade. Don't forget, the concept of this video is solely to show you guys that whether you're a small trader or a big trader or someone who just started trading, you don't have much funds, you don't have much capital, it's not an excuse to not make it in trading. Right? So we all started small. Never forget, it's not a show off but strictly educational purposes. Smart money concepts only. Well, let's get straight into it. On the daily time frame right here on crash 500, we can clearly establish the fact that our bias is bearish. You can see the simple trend lines down here. And then finally, basically listing two things, that's gave me that bearish bias. And it's this clear and obvious, beginner model for identifying trends, which shows that it's very simple trend lines. And secondly, we have this liquidity. But now we need to know that the market makers are interested in grabbing liquidity. Now, wherever they believe your resistance lines are, support trends, they want to clear those things because there are orders, stop orders, limit orders, pending orders, stop losses, take profit, a lot of orders, bank of orders residing, at this important key levels. So there's something here clean. You can call it a resistance zone. So whatever you want to call it is right there, clean. So what do? They come for that region and clear it. So we call that liquidity. Right? So that's this dollar sign, just a symbol for liquidity. Your brokers are taking some money there. So they trigger it, take it out, and then that is the second point that gives me my reason for bearish bias. So that's that. Without wasting much time, we just drop down to the 1 hour, and I already try to outline a lot of things for you to see. I believe you know what I'm talking about. So you see liquidity grab, liquidity grab, liquidity grab, all the way down. And then since we have bearish bias, we are down into this very simple. It's a simple, very simple, textbook setup, right? Nothing special. You just have this order block. Excuse me. I have that order block, and then I refine this supply zone. I just refine it to a lower time frame and just drop down to M1, man. Too easy. It was really, really straightforward. It's not really as complicated as the other videos I've dropped. Just something really routine. I just open my chart, saw it as well. Let me just fund $10. I funded $10, just for the purpose. Let me do a motivational video, and I did this. So it's really, really routine. Nothing to think too much. So same thing we do on the higher time frame. Do it on the lower time frame when it comes to refining that order, refining your chart to make a trade. So you see, we've come from the daily down to the 1 hour to M15. Now we're on M1. So in my other videos, I talk about using M5 for entries, M3. Well, here we're on M1. That's it. They are all the same thing. So just as long as you know what you're doing, don't confuse yourself. Don't miss the key ingredients involved in your analysis, so you don't get analysis paralysis. As long as you don't take out those key ingredients, you can do this on any time. But the more you try to refine your entries, the more wonders you can do, because you're able to get tighter stop loss, and so you can pump those lots to flip that account, especially when you know what you're doing and you're sure of your bias, you're sure of what you're doing, you're sure of your analysis. You're good to go, man. So this is it. Liquidity taken out. All right, and then we have our model, classic model for sell entries, and just basically entered off the moment this low was taken out. We had that change of character, the lower time frame change of character. I knew that the market was going to run down, and that was just it. That was just, yeah. So now let's talk about why I set my take profit here and how I knew that the market was going to get there. So let's go back to the 1 hour time frame, which is our reference point here. Make no mistake, this market is coming here. The market is going to come to this place. As you can see, is my next draw liquidity. But when you are dealing with small accounts, you don't want to do more than yourself, right? You don't want to do more than yourself. You want to hop in, hop out, right? Yeah, your goal when trading small account is to make profit, to grow the account, right? So it's not, you're not there to look at profits vanish in front of you. You don't want to risk it, because yes, we are doing analysis, yes, but market has given you money. Why take that money? All right, we are being realistic here. If all I have in my life is $10, I'm trying to grow it. If I see $60, or I'm seeing $60, and clearly we are seeing a demand zone, although it's a minor demand zone, but then I expect price to react off it. All right, it's a demand zone, although I don't expect it to do anything serious. Maybe take it up to this point, but respect this high. Doesn't not take out this high. Okay, play somewhere around here and then drop further, to take out this low and then tap in here. But either way, there's no point, risking your equity and playing with profits the market has given to you. The market is not really your friend. All right, so take that profit. So when you close something like $62, profit you've seen $62, what opportunity does that give you? We just made this amount in one trade, right? We just did times 6 in one trade. So what does that tell you? Now you have $60. You can leverage more from that $60. Man, you know what you can do with your second trade? You can take that $62 to 300, 400, even 500, man. Risk like half, or risk $20. Flip. Okay, sorry. Let's be realistic now. $10 was all you got. You flipped it to 62. You are not going to risk half of it. All right. Risk another $10. Divide into 6. When you know what you are doing, there's no way you're going to do 6 trades in a row. It's not even possible. Right. So you can divide into 6. Risk $10 or risk 20. Divide it into 3. Risk $10. All right. And then, sorry for that distraction. Risk $10 and then try to give yourself that kind of 6 trade opportunity to flip it further. So we expect the market to come down all the way to this level. So that's it. So that's how I set my take profit here, and the market just came all the way down to fill that take profit, as you can see. So thanks for sticking around. Welcome to the end of the video. See you in the next episode.